All right, welcome back. We got week 10, and I'm pretty much terrible because I'm already behind. So I'm going to do 11 right after this. So this one's going to be nice and short. So for, so I, pretty normal week, couple earnings trades. Earnings are getting a bit light this week, or this week 10 here. And we did have a couple of trades though. So let's see here. We had the 8th through the 14th, in case I had any that went through to expiration. All right, we had 13 orders, 14 fills. And Stone, Alta, let's see here. All right. So, of course, with the Iron Condors, those are going to be earnings trades. Canva, we had a closing out, nice little piece there. I'm going to slowly roll through these. You should quite, if you've been following along, understand the differences. Or if it's showing an Iron Condor, probably an earnings trade. Most likely an earnings trade. Let's see if we find anything special here. No, not really. So, yeah, and it's showing me a loss of about 350 bucks on here. So we'll flip over to our wingman. Let's see here. All right, and here we are for week 10. We did, let's see here, get this set up. All right, 40 bucks. Ouch. And I think, I know. The difference on ThinkorSwim showing a minus 350, that includes open positions as well. So running totals as we go. And obviously the market's slowly coming out of the bit of the dip. So we had a little down. So that's why the 40 is different than the 350. Let's see here. Can we get some earnings? Earnings loss 111, so not ideal. Actually, we didn't have a whole lot of things, so we should just be able to do this. So our earnings, Iron Fly, Iron Condors, doing all right on the Iron Flies again, profitable, 75%. Money, that's what we want. Iron Condors just getting wrecked again because you can't take in as much credit. They are a much higher probability of being right, but obviously earnings this year so far has just been all over the board. They're not really sticking to the averages like the math should play out. And then we did have that one short call spread close for a nice little 71 bucks. So nothing crazy, but you do this enough times, it's a nice living. Down here, let's see. So these are all the tags. I add these on later when I'm journaling. I had one trade that could have been 250 profit. I think that was very upsetting for sure. Alta, yeah. So Alta, I could have gotten out right at the open for a smaller profit. So that's part of my could have been $250 in profit or more. Because if I just made this a 0 or even a minus 50 instead of a minus 350, obviously that's keeping $250 in my pocket. But I even could have gotten out for about $50 of profit, so about a $400 swing. Oh, and it's frustrating for sure. We'll look at a chart real quick since we're pretty much done with this. But pretty standard week. I'd say there's a lot more of these than typical. So what I'm going to be doing is I'm going to think of something here, about a 5-minute lesson to add on to the end of this to just kind of get it to the 10-minute mark. I like to have these videos about there. So yeah, just a moment. All right, we're back on the platform. We're going to talk about Alta a little bit. So here with the trade, I just wanted to show you the trade that we had. So on the downside, we wanted to be 325 or higher. And so now if we look at the chart, obviously, so we got in around here, 346, and we wanted to hold about 325. Huge down move. So they did beat earnings, but their CEOs are changing, which is never good. Market doesn't like change. Let's see here. Beat earnings per share and sales, but fell hard due to the bad news around the CEO change, that sort of thing. Had a small spike in the afternoon, but I didn't get out. I was waiting for a small profit. So greed will get you, bite you in the ass. But the lesson to learn here, and what we're going to talk about, is going back and testing to see, had you done some small adjustments, what would have happened. And so as you see here, we'll zoom in a little bit more. So we had a huge down move, little spikes, and this was, what day was this? 11/12, which I believe, 3/12. No, 3/11. So 3/12. So this is Thursday. So not a whole lot of time left in the day, right? Just the next day. But ULTA, which you don't know about ULTA, and I only know this because I've traded a few times, always has higher implied volatility than it should, just because it moves all over the place. So as we see when it opened, the open mark here was about 317, and then it spiked up to about 323. So this spike, along with the crazy move and after hours, implied volatility is pumped higher than it should be. So it was at 112 over here, and then ideally, especially being a Thursday night, so there's only one day left, and earnings is now over. That number should be closer to, wow, what's a normal number for them? 30%, right? So we should have lost from 112 all the way down to 35, 40%. Due to this big move and this spike here at the morning, this is probably more like 50 or 60%. So I mention all this because this allowed, this little spike, even though it wasn't above 325, allowed us, and I went back and back tested to confirm, we could have gotten out for a slight, like $5, $10 profit. We took in $1.50 of credit. We probably could have gotten out for $1.50, $1.45 in the God's dream of a play, right? Realistically, we could have gotten out for $2, $2.25, no problem at this open, which would have been, again, $200, $250 or more in profit because the trade ended up being a max loss of $350. So if we'd have just made that a smaller loss, that's a big win, right? And those add up over time. So what I want to show you is, at least in ThinkorSwim, and I believe other platforms have this, there are other third-party applications that have this, but it's called this on-demand feature. So what this is the time machine, right? So we have a time machine and we go back, make sure the date's right. So in this case it was March of 21. It was on the 12th because it was that morning. And we're going to set the time to 228:57. So right before the open. And we're going to pause it. And then we're going to go over here and we're going to build our trade real quick. We had the 325s, 320s, and then on the long side, shoot, what did we have on the long side? Here we go. And call side with 370, 375. Alright, so $2 credit's what it's saying. I'm going to put in a 150 to show you. And I'm also going to do a 2. No, we won't do that one. That'll just confuse things. So we're going to put this order in. Good for the day. And now we're going to hit play. And we're going to turn up the speed. And now what this does, again, if you look at the date, March 12th. So this is replaying the entire day for March 12th. So we already know, as you can see by the piece, the stock's already fallen considerably, right? Boom. So now we're just playing that open to confirm whether or not I could have actually saved, had I not been as greedy, had I could have actually saved $200, $300 on this piece, right? So we're going to hit play, we're going to fast forward. And it should be just keeping us, we're on the 5 minute, let's go to the 1 minute just because. And so we're about to take over on the start, and we should see a nice little ding ding up in the left corner here. Oh, it's going to be behind my my picture, but that's all right. So if you see the mark here, hasn't filled yet. and I may have been a little off, but that's all right. Oh, there you go. Oh. All right, and so if you were paying attention, I was an idiot, and I was trying to sell to open a new one instead of buying to close one as well. So it filled at the wrong price, obviously, for the credit. But again, this shows it was listed overnight at $2. So this jumped and filled at $3.34. So there's that implied volatility popping up, as well as it's not going to show it for us here. So that's the one downside to this on-demand time machine thing, is it doesn't always show all of the different data points. It's got the big ones, price, volume, that sort of thing, but it may not always show you the implied volatility, which is definitely something that I use. So it's not great for that. I already know the implied volatility, what it was the morning or the night before, and I know typically it's around the 30 to 40%. But anyway, so we're going to try this again. I've got 3 of them this time because I may have been a little optimistic in the 150, but we changed. We got a 250 and a 3 now, and so we'll see if I was right and one of those filled. So we got the market opening here. Boom, boom. It's going to spike up a little bit more. And we got a nice green line here, so it pops up. Now it should fill shortly. No. Again, this is all over the place. There we go. So what do we got? We got a fill at 296. Right? So I'm going to let this go a little bit longer because I think we get a better fill later in the day. So assuming I missed the open, which I did, we know that. Oh, what time is that? It was 11:30. Let's do that. Alright, so yeah, so in case I missed the open, which I did, but as we see later in the day, it did have another run up here, and this I believe we got filled at even like better than $3 here. So but the point being is just because it's showing a potential loss or it's below our line in the sand, right? 325 was our line in the sand. But because of implied volatility and the crazy movements after earnings, you can get out for less than max loss, right? So if we'd gotten out at 3 or 296, as we just heard our fill go off, then no problem, right? That's great. Instead of $5, we just saved ourselves $204 there, which is great. So yeah, so I use this from time to time when I think I could have done better, and it was just being lazy, or maybe I was still laying in bed, because I've definitely been in bed on some of these opens where I get up, I make the changes, and then I crawl back in bed and see what happens, which isn't always the case, but for the most part, especially with iron condors, since they're so far apart, it's pretty easy to kind of set and forget and walk away in the morning. But it doesn't look like we got filled any better. Oh, we did. I just didn't hear the beep. Or maybe not. Did it cancel ours? Also, a fun fact, this thing can glitch on you from time to time and do fun things like cancel your orders. So let's try that again. There we go, 239. So that was the best fill, absolute best. Had I waited until later in the day, which I was absolutely looking at the chart when this happened, when it was coming back up, hitting 325 again. I saw the thing around 250, and I was like, you know what, I should do that. But I was like, no, maybe it'll come back, right? And I'm not necessarily wrong, right? It's coming back off the bottom. It could have continued up, and it could have been a max profit. But at this point, I was already max loss. If I can break even or reduce that by any amount, I would have much rather told you guys the story of how, hey, I got out for a 250 and saved myself $250 of loss, but it also kept going, and so good old joys of the stock market. So, but that's the on-demand tool. It's got a lot of other cool features. Like this is a full-blown you know, you can treat this as a paper trading thing, right? Except you can go back in time, which you can't do with paper trading. But all these trades in here are going to be obviously fake. It's in a virtual account. But you can go back to like March of 2020 when the big dip happened before COVID and trade that, or build your portfolio and see how it would have done in here. The analyze tab works. You can do the risk profile, see how your portfolio would have held up during a crash, right? Definitely a great tool for that, and there's a lot more on it. I encourage you to check that out if you do trade on ThinkorSwim. It's called OnDemand again. They got a lot of education about it under the education tab, or you can Google. There's a lot of YouTube videos on that. Maybe I'll go more in depth on a YouTube video here coming up. But yeah, that's it. So thanks a lot for week 10, guys.